Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at two stocks that analysts from Goldman Sachs think could grow over 40% or more. So let's get into it. All right, guys, welcome back and thank you all so much for being here. Today, we're looking at two stocks that are in very different sectors, but have one thing in common: buy ratings from analysts at Goldman Sachs with some pretty attractive upside potential. So in today's video, we're going to take a look at these two companies, what it is that they do, and what has analysts feeling so bullish. Just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Okay, let's jump right into these two growth stocks. For our first company today, we're taking a look at the pharmaceutical industry with PMV Pharmaceuticals. Their stock trades under the ticker PMVP and is currently priced just shy of $29 per share. PMV Pharmaceuticals is a precision medicine company focused on the treatment of cancer. They're working on this through the investigation of the p53 suppressor protein. This gene is well known as a tumor suppressor, and as many as half of all human cancers include mutations in the p53 gene. PMV is working to create personalized cancer treatments, patient-specific based on particular p53 mutations. The p53 gene activates in response to DNA damage, which is frequently implicated in tumor formation. Mutations of the p53 cause the protein products of the gene action to lose their tumor-suppressing function, allowing cancers to grow unchecked. PMV is working to develop treatments based on small molecule therapeutics that selectively target mutated p53 to restore its natural anti-tumor function. PMV currently has two drug candidates in their developmental pipeline. One of them is still in preclinical stages, but the other, PC14586, is starting phase 1 clinical trials. Enrollment in the trial is ongoing, and 12 clinical testing sites have been selected in the US. The company has successfully acquired a fast-track designation from the FDA for PC14586. PMV shared their quarterly earnings report back on August 13th. They ended the second quarter with $339 million in cash equivalents, and marketable securities, and their net cash used in operations was $22 million for the 6 months ended in June 30th. Their net loss for those 6 months came in at $24.5 million, and their research and development expenses were $15.2 million. Weighing in on the PMV stock is analyst Paul Choi from Goldman Sachs. He says that although investor expectations are admittedly varied, with shares having traded sideways for most of 2021, we think PMVP presents an attractive risk-reward into upcoming phase 1 data, with even modest success here relative to a low clinical hurdle, potentially driving a meaningful upside given that p53 remains one of the untapped white spaces within oncology. Paul is one of 5 analysts that have a current rating on the PMV stock, and it does come in as a strong buy based on 4 buy ratings and just 1 hold. Their average price target comes in at $59.25 per share, which would be an upside of 104%. Paul does have the most recent, but also the lowest rating, with a buy rating at $43, which would still be a 48% upside. On the high end, we have a price target from Evercore at $75, which would be growth of nearly 160%. For our second company today, we're moving over to the automotive industry with Stellantis. Trading under the ticker STLA, they're currently priced at $19.61 per share. Stellantis is a European conglomerate and came to be last year from a merger of 2 major automotive companies. Now, while you might not recognize Stellantis by its own name, you will definitely recognize some of the brands within it, as the company claims ownership of some of the industry's best-known names. This includes Maserati, Alfa Romeo, Jeep, and Dodge Ram. They're now the world's 6th largest automaker, and the company is making moves to make itself present in the ever-growing EV industry. And they're working on 4 full battery electric vehicle platforms to support market and customer needs, ranging from small, medium, and large, with varying sizes and battery capacity depending on need. They're working on an end-to-end charging and energy solution experience, offering 360 degrees charging solutions for private, business, and fleet customers, providing day-to-day smart charging offers, and supporting customer experience with specific tailor-made solutions. They plan on being at the cutting edge of the future of smart grid solutions, launching a unique fast charging network, and simplifying e-mobility everywhere in the world. They're also looking to expand their presence in the financing segment with an announcement made earlier this month. The automaker announced an agreement to acquire the financial services company F1 Holdings. This acquisition will give Stellantis a stronger entry into the U.S. automotive financing market. Looking at their earnings report for the first half of this year, their revenues came to $84 billion. The company claimed $7 billion in profit for the first half of 2021, along with $61 billion in liquid assets. Stellantis is planning to move into the U.S. electric car market with electric versions of recognized brands such as Dodge Ram 1500 and the Jeep Wrangler. One analyst weighing in on the Stellantis stock is George Galliers from Goldman Sachs. He points out that automakers have faced recent headwinds, primarily from the semiconductor chip shortage and related supply line disruptions. However, he is bullish on Stellantis' prospects, especially due to the company's strong product line. He says that Stellantis should continue to benefit in the coming quarters from the introduction of new models. The three-row Grand Cherokee continues to see strong traction, helping GC sales to grow over 49% in July and August. Meanwhile, the introduction of the two-row variant and the commencement of shipments of the Grand Wagoneer and Wagoneer will benefit at the back end of the year, not only in terms of volume, but also price over mix. The Stellantis stock has 9 current analyst ratings, and it comes in as a strong buy based on unanimous buy ratings. The average price target comes in at $28.48 per share, which would be an upside for the next year of 45%. On the low end, we do have a price target of $22 from 3 months ago, which would be an upside of 13%. The most recent rating is George's at $31.55 for an over 60% upside, and on the high end we have the Deutsche Bank at over $35 for growth of 78%. So there are 2 companies that analysts from Goldman Sachs think has some pretty impressive upside potential, and it seems that there are other analysts who agree as well. Now, I'd love to hear from you guys, so make sure to leave your thoughts in the comments down below on what you think of these 2 companies' growth potential, or what other growth stocks are catching your eye lately. I always love hearing from you guys. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching, and I'll see you back here next time.